Okay, I'm gonna let the attendees in, but I'm just gonna launch a little poll, so it's not like we're getting fully started quite yet. Okay, I'm gonna let the attendees in, but I'm just gonna launch a little poll, so it's not like we're Hi, everybody. Thank you for joining today. We'll get started in just a couple minutes as we wait for people to trickle in. But in the meantime, I'm going to launch this poll. So go ahead, have a go at those questions, and I'll share the results later on. All right. Welcome, everybody. It's great to see some returning names of attendees. Great to know that some people are back for more. That's really great. So thank you to everybody who is coming for the second and final meeting of this educational feast we at MyFly have planned for you. Before we begin, I just want to thank one more time our fantastic guest speakers from yesterday, Jimmy Bisharat, a financial planner at Gerber Kawasaki Wealth Management, and a financial advisor to athletes, as well as Cameron Galbraith, Director of Advisory Services at JP Morgan, and a New York City-based content creator. They all put so much thought and care into their answers, and we were really lucky to hear from them. Of course, we really appreciate you, the audience, for your time and passion for learning. A bit about our name, MyFly. It might seem a little bit strange, and to explain, it's a little acronym that stands for My Financial Literacy for Youth. So our mission is to address the lack of financial education taught in schools, and we do that with interactive courses on personal finance and investing, and by facilitating discussions like this between investment professionals and youth. So thank you for being a part of this movement simply by tuning in tonight. We're really lucky to have a dedicated team of students all around the globe, spanning North America, Europe, Africa, and Asia. And if you're at all interested in joining that team to help further our mission, just visit the contact page on our website, myflyglobal.org. I'd also like to announce that unfortunately, Mr. McKinstry won't be able to join us today due to a family emergency that has come up. We send our best wishes to him and his family. And to fill his place, we have Mr. Fuad or Frank Khan, who is joining us in spite of some difficulties with air travel. As you can imagine, being in high finance comes with a lot of air travel, a lot of flying around the world. So we're very grateful that he can make it today. All right, so thanks to those of you who have filled out that poll. If you haven't yet, go ahead and share your thoughts to our questions there, and we'll share the results in an hour. All right, handing it over to a student some of you in the audience might recognize. Sahib, take it away.
Hi there, my name is Sahib Sohi, and I am a student at Central Peel Secondary School here in Ontario, Canada. I have just recently joined MyFly, and I'm currently an operations coordinator, helping make finance contact here in Eastern Canada. MyFly is truly a place where finance blooms and can truly be unlocked, as we will see today through the help of all our organizational partners, whom we would like to give a huge thanks. So, a big shout out to the World Literacy Foundation's Young Ambassador Program, United World Colleges, Techno US, Blue Dragon Children's Foundation, the Young Investor Society, you'll hear more about them later on, Mission Asset Fund, Illuminate Business, and Smile Foundation India, who have also asked us to deliver a special message from them. In this rainy season or monsoon, many parts of India are either inundated with floodwater or affected with landslides. Although the government authorities and organizations such as Smile Foundation are quick to respond, children are the worst sufferers in any calamity. We have been doing our best in coordination with various government agencies to mitigate the outcome. Smile Foundation is a 2-decade-old Indian nonprofit that works in the area of children education, skilling of youth, and healthcare across Canada. Some 1.5 million children and their families get directly benefited from our work every year. A child, especially from an underserved background, can be educated, equipped, and empowered only with the active participation of their family and their community. Hence, we take a life cycle approach of development rather than working on a child in isolation. Financial literacy, right from a young age, is essential for a child's bright future. Now, with that message, let's begin. Handing it over to our moderators for today, Nina and Pablo.
Hi, I'm Nina. It's nice that I recognize some of you from yesterday. I'm from Dallas, Texas, and a VP here at MyFly, and I'm a rising senior at the Episcopal School of Dallas. I'm an active member of my finance club, and I was introduced to MyFly 2 years ago through a friend.
Hi, I'm Pablo Castro from Mexico City. I'm a rising senior at the American School Foundation in Mexico City, and I joined MyFly through a friend in 2023. Within the organization, I've worked in the social media team, and along with the Mexico team, have given courses about financial literacy to people around Latin America. So we'll just give a brief intro into the 4 amazing speakers for today. So first, Eric, the co-founder and managing partner of Wolif, an investment fund focused on tech-based business models. He co-founded the Mexican Online Sales Association, AMVO, and has been active in the internet industry since 1999, launching Mercado Libre Mexico. Eric's career includes roles at McKinsey and Bain, and leadership in various e-commerce ventures. He holds degrees from Tecnológico de Monterrey and Stanford University, where he was a student leader. Frank is a former equity researcher at Goldman Sachs, is currently a senior vice president at GuidePoint, a research platform that connects investors with information and expertise. He's also a co-founder of Scale Brand, an e-commerce accelerator that helps online sellers succeed among the competition.
Chris graduated from Princeton with a degree in East Asian Studies and served as a U.S. Navy intelligence officer from 1999 to 2005, including deployments to Japan, the Middle East, and Africa. After working for the military contractors in Washington, D.C., he earned an MBA from UVA and joined Taiyo Pacific Partners in Seattle in 2011. For over 7 years, he worked on Japan-focused operations and later managed the Taiyo Greater India Fund. He left Taiyo in May and now coaches baseball and hikes frequently. Reza Keshavarz is an experienced healthcare investor and a co-founder of a 2020 SPV fund that took a significant stake in a single security, driving value creation. He served as a partner and director of therapeutics at Constance Capital from 2020 to 2021 and spent over a decade at Scopia Capital as a senior healthcare analyst and partner. Before transitioning to finance, Reza was a practicing physician and director of pediatric emergency medicine at Mount Sinai School of Medicine. He holds degrees from Northwestern, Albert Einstein School of Medicine, and Harvard. We'll start by asking the panel some predetermined questions, including questions submitted by signups. And towards the end, we'll conclude with a Q&A from you, the audience. Feel free to type questions in our Q&A section at any time during this conference, and we'll get to them at the end. If it's speaker specific, make sure to add the name of the speaker at the end. Our first set of questions for the panel is about role specifics. So we'll start with Chris. What are the responsibilities of your current or most recent position?
Thanks, guys. So I worked for Taiyo Pacific Partners, which is an activist equity investment fund. And so as part of that, our investors invest in us to both choose good companies to invest in and then engage with them to improve their operations or otherwise help them outperform the market. So for the first 7 years, I was on the engagement side in Japan. I spoke Japanese for a number of reasons in my background that I'll get to. And so I worked on the engagement part for 7 years. And then the partners asked me to move over to the India fund, where I managed the portfolio management aspect along with the engagement in India.
Great, thank you. And feel free as the speakers to jump in anytime you want. But we can move to Frank.
Hey guys, my name is Frank Kahn. I'm a senior VP of business development at GuidePoint. I've been with GuidePoint now for over 18 years. I came from Goldman Sachs Equity Research, covering biotechnology, and part of my role and responsibilities is actually kind of overseeing a sales team. So I have a few sales individuals under me, and my goal is to really kind of facilitate research not only for buy side, which includes your hedge funds, private equities, venture capital, but we also work with management consultancy firms. And beyond that, I am a founder of Scale Brand, which helps accelerate e-commerce platform, particularly firms which are focused on Amazon. So we own and we have purchased some assets in those class. So, but day-to-day job mainly is GuidePoint.
Great, thank you. Eric?
Hi, guys. First of all, thanks a lot for having me. It's a pleasure. It's an honor. So my main responsibility is as a partner of Wole. It's a venture capital fund that I co-founded several years ago. And as you mentioned, we invest in tech companies for the Spanish-speaking markets. And in that regard, my main responsibility is first to detect amazing entrepreneurs. Second, convince them that they accept me as their investor. And third, once they allow me to become their investor, to help them as much as I can for them to achieve their goal of building amazing companies. I'm also a board member in several of the companies in which I have invested, but also in some organization and other companies. The most relevant one is Walmart of Mexico, that curiously it's a public company. People don't know that, but it's a public company on its own. And as a board member, my responsibility is to help the management decide what is the best course of action, both in the very short term and the very long-term decisions that they have to take.
Thank you. And finally, Reza.
Nice to meet everyone. I'm, as Nina mentioned, I was a physician by training, and in mid-career I switched into finance, and I've worked primarily investing in various healthcare areas, which is my kind of expertise. And I guess in my day-to-day life, do a lot of research and try to understand the companies and the management teams and how the companies are positioned. And also spend a lot of time trying to understand the medicines that are being created and how valuable they are and where they can kind of sit in the ecosystem. So a lot of time, talking to people and thinking about kind of the future and doing a lot of research is kind of my day job for many years. And actually, I used Frank's services for many years. He was at my person when I was at Scopia, and we used GuidePoint to help us come into contact with experts as you kind of look at kind of new things that are emerging in healthcare. Sometimes you know people to talk to, but often it's helpful to talk to people who have a lot of very specialized expertise. And Frank's firm was very instrumental in helping us put us in contact with those people.
Great, thank you. It's nice to see that contact and overlap between your guys' jobs. We can next talk about the most challenging and rewarding aspects of each of your jobs. So Chris?
There we go. So we are a long only equity manager. And so I would say always the most challenging aspect of the job is to beat the benchmark. That's our job. Especially, if you followed the news, being a long only equity manager, I think in the last 15 years is a very difficult thing to do consistently well. And so if you're in that world, I think number one, you have mark the market every day. So you're constantly fighting daily moves in the market, and trying to battle making good long-term decisions for your investors with the daily emotions of whether or not your stocks are outperforming or underperforming, I think is extremely challenging. There's a certain amount of fortitude that comes with experience, I think, certainly, when you do it for a long period of time. But nonetheless, I don't think it ever gets easy to try to keep conviction in your names when the market is saying something else right now is more valuable or something else is hotter. So I think just in general, in the long equity mode, I would say that's the most challenging aspect. And then specifically in India, it's an exciting market, but there are still a lot of learning pains for a lot of companies in many different ways, whether or not it's, there's a reasonable amount of outright frauds that are listed on the exchanges. There's movements in stocks that can be unexplained by fundamentals a lot of times. And so being a participant in the India equity markets, I think, adds some additional challenges just because it is an emerging market and there are some unique stock movements there. And then in terms of rewarding, I mean, just in general, being in this industry, I think the other panelists might agree, you just get to learn a lot. So if you enjoy learning about, companies, industries, new products, and enjoy just coming to work every day learning about something, I think is a wonderful, wonderful industry to be in. It's obviously, it feels wonderful when your stocks outperform and, you're up 20% on the year versus the benchmark. That's also an extremely rewarding feeling. But I would say to stick with it in the long run, you definitely have to have that enjoyment of just coming every day and enjoying to learn about something new. I'll leave it there for now.
Yeah, for sure. We can move to Frank.
Yes. Hey, Reza, good to see you. Yes, I've known Reza for a while. So I guess rewarding parts of it is similar to what Chris mentioned. It's really interacting with some of the most intelligent people in the world. So we manage a network of experts. So you're dealing with business executives in various industries. So that network contains some of the smartest people. So when guys like Chris, Reza are looking to understand, various industries, whether those are Indian markets or globally, any place, they need to speak with people who are actually within those markets. So my company supplies those. We also host a lot of teleconferences. So just understanding and learning about new technologies and working with really smart clients like Riza and Chris and other panelists. That's very rewarding. In terms of challenges, I think the biggest challenge is constantly evolving markets, and technologies are changing, and that brings its own challenges. And now that being part of also business development, it also, you're impacted by the markets, how markets are performing, because if your end clients are not doing well, it is going to impact you. But fortunately, I am I am in a business which it's kind of spread out. Not only that we work with the clients on the public equity, but we also work on clients who are investing in the private markets, like venture capital, private equity. So each subset of strategy brings its own challenges. In different times, one investment strategy could be hot, and meanwhile the other one may not be doing as well. So that gives us that gives us a somewhat play that when one market is not doing well, we can focus on something else. But the biggest challenge, I would say, is the market dynamics, new players coming in, and then constantly evolving to compete with them. That would be it.
Great, thank you. Either Reza or Eric.
I guess in my neck of the woods, one of the things you're trying to do is predict the future, and you're trying to see what is likely to happen in the coming years, and what kind of medicines are being developed, and what things are going to be exciting and kind of impactful in the world of healthcare. And often you're looking out for quite a number of years to try to figure those things out. And at the same time, there's so much information, and often a lot of that information is really just is noise along the way. And it's as Chris, I think, pointed out, sometimes it can be challenging just to kind of keep your focus, especially if you have like a point of view that's different than others. Because the way you can kind of distinguish yourself, I think, in this world, is you have to have some view that's different than what everyone else thinks, and you have to be right. So you have to have both of those things. So sometimes along the way, lots of bumps occur on the road, and things happen that are very unexpected. And sometimes it's one, just to kind of keep your focus and not be distracted by all the huge amount of information that's bombarding you every day. And two is to kind of make sure you can stay calm and stay rational in your decision making, and really kind of look for the prize that often is pretty far away, where everyone else is often looking kind of just right in front of them. So that's, I think, one of the big challenges in kind of being a successful investor, is to kind of think long term, but be able to kind of deal with all the short term things that happen along the way.
Yes, Eric.
Thank you. So I will start with the most rewarding. And in my case is that I have the opportunity to interact on a daily basis with amazing people. But basically, entrepreneurs are fantastic individuals that have the courage to start things from zero with the vision of creating something amazing. And that for me is fantastic. And I've been lucky enough that I've seen already several stories of people that started with just a table and a chair, and they went all the way and became public listed unicorns in the US. Regarding the challenges, and I, listening to Reza, I think I share some of them. First, in my case, in the venture capital world, what happens is that you're going to have few successes and a lot of failures. And the few successes that you have, they have to be huge successes. Like I need that for every $1 that I invest in an entrepreneur, I need to get $20 back. And that's a challenge because I see a lot of entrepreneurs that I may believe they have a chance of being successful, but I have to believe that they have a chance of being extremely successful. And normally there is not a lot of data. So I need to be able to decide what data is useful, but also I need to be able to be good at understanding qualitative variables. And we're gonna probably speak later about that. And another challenge is that I get to see a lot of failed businesses, in all honesty, and it's very tough. Just this week, I had lunch with two fantastic entrepreneurs that failed, that the company failed. That doesn't mean that they failed as persons, but the company failed. That's hard. It's difficult. In the end, all these things bring lessons. I failed many, many times in my life, and those have been the greatest lessons in my life. But when you see a young entrepreneur fail in their business, it's hard. So, and I see it a lot. It's part of my business.
It's nice to hear all those aspects. I'll hand it over to Pablo.
Okay, so I think now it'd be great if we could learn a little bit about the way you guys broke into the finance industry and what led you to your current position. So just a little bit about your career journey and also about how your education prepared you for your career and what you studied in order to get into the finance industry, and what did it not prepare you for. So we can start with Reza, I think.
Sure. I kind of came into finance kind of through a kind of non-traditional route. I studied computer studies in college, and then I went to medical school and public health school. I actually did residency training in pediatrics and emergency medicine. So, and I was in an academic medical center in New York working as a clinician and a kind of administrative person for a number of years. And then I kind of mid-career, I shifted gears. I knew someone who was in finance. We're friends and we had talked over the years. And he, as we were talking, I was thinking of kind of doing something a little bit different. And we kind of talked about it. And he said, well, if you're interested, you can come see what we do at our shop. And I did, and I kind of went and I talked to people there, and eventually I wound up coming on as I spent some time there and did some cases for them and did some analysis, and then eventually became a consultant to them, and then wound up, working there for more than a decade. But in that time, you had to learn I knew a lot about medicine, but I didn't know really anything about finance and how it worked and the ins and outs of, I didn't know what Bloomberg was, and I didn't know, I didn't know CEO and CFO. I didn't know what EBITDA meant. I didn't know the things that the financial people do. So, I took some courses and I studied a lot. I attended a lot of seminars, but mostly it was kind of self-learning and learning the language of Wall Street. And, over time you have mentors and you work with good people and you pick up, good habits from good people, I think, over time. And, as time goes by, you just get better and better at what you do, and you just have to be kind of dedicated. But, in my neck of the woods, there are certainly people come from all different backgrounds. Some people come from straight finance backgrounds. Some people come from straight healthcare backgrounds. Some people come from mixtures of those things. So, but all of it, I think, requires just a lot of interest. You have to be the kind of person who is interested in learning a lot of new things, because there's always something more to learn, both on the finance side and on the healthcare side.
Thank you, Reza. I think, Chris, can you talk a little bit about this?
Yeah, I would echo Reza's sort of general career path, and that I didn't even think about finance until very late on. I was always interested in stocks, I think, on the periphery, but was just more interested in learning about other things, I think, throughout high school. And then in college, I majored in East Asian Studies, mainly because I wanted to play baseball. And I had taken a year off and gone to Japan and kind of already had Japanese in the hat, so to speak, or I thought I did anyway. And so East Asian Studies was one of those majors that I could I could take and still have lots of time to practice baseball in the, in the afternoons and weekends. And then, certainly, when you go to an Ivy League school, there's lots of recruiters from Goldman Sachs and, sort of the bulge bracket banks and consultants, but I just never was interested in that at the time, and just decided to do something that I thought sounded adventurous, which at the time was the Navy. And so the Navy actually does a really good job to take care of, I think, the people financially, in the sense that you don't have to think about housing, you don't have to think about healthcare, you don't have to think about all the general finance things that I think actually most adults come to grips with soon after they graduate from college and have to deal with. So I didn't really have any finance knowledge, obviously, built up in the Navy either. And I had a lot of fun. I mean, 9/11 happened while I was in Japan. And so I went from spending a lot of time in Japan in sort of the East Asia area to then getting deployed to Djibouti, Africa for a year, which I never would have asked for, but was actually a wonderful experience. And then we were off the coast of Afghanistan for a bit. There's just a lot of experience that happened after 9/11. I obviously being in the military, that they were just really invaluable experiences. However, I was in the Navy, and one thing I learned was that I did not enjoy being on a ship for 6 months. And so when my time came up after about 5.5 years, I resigned and went to DC and basically did something similar where, you've heard of the military industrial complex in the United States. There's a whole lot of private companies. They're listed, but private companies that do services for the military and intelligence community. And so I joined one of those companies when I left the Navy, and really got fascinated with the business aspect of it, because that's how you succeed in that world, is you create good businesses. And the more I learned, the more I thought, no, this is interesting. So I thought I'd get an MBA and learn more about business, and maybe move into, higher leadership there. And just randomly, I went to a Japanese English career forum in Boston, where I met Taiyo Pacific, just because they seemed like an interesting firm. They're investing in Japan. My wife is Japanese. I wanted to be closer to Japan. And sort of, met them and really was impressed with their approach and how they engage with companies. So joined them. And then since then, it was basically just, when you engage with Japanese companies, actually what you learn is that the board members of Japanese companies are a lot like Reza and I were before we knew anything about finance. Most of them have no idea about finance. They grew up, making auto parts or electronics. And so they have very little finance knowledge. And so even someone like me that didn't have a ton of finance knowledge actually had a lot of perspective that we could bring to those companies. This was back in 2011 when we first started. And so the engagement aspect was just fascinating, because the bar was so low at the time when you approach these Japanese companies. And so we did really well there. We also took a company private, so that allowed us to get even closer with the company. And then the partners, like I said, they asked me to join the India team, because we had just received our first outside money there. So that was, the Japan fund at that point was $3 billion or so US, and the India fund was just getting off the start line with about 100 million, and they said, "Will you join the India fund?" So I spent 6 years on the India fund. It turned out that one of our biggest investments was a fraud, which I can get into later. It was one of the most amazing experiences of my life. Sort of, if you've seen Usual Suspects, if you haven't, for the younger people in this, you should watch the movie Usual Suspects. For those of you that have seen it, that scene in the end where they realize who Kaiser, actually, I don't want to give it away, but anyway, they realize who Kaiser Sose is. That was we had a few of those moments with this company. It was unbelievable. So anyway, the portfolio manager there, we ended up moving on, and they asked me to actually do the portfolio management, the due diligence, along with the engagement with the India fund. So I did that for 6 years. We ended up growing it to about 250 million, but it just never got scaled. And I would argue that, none of us have talked about this, but in the industry, marketing and just general asset collection is one of the most underestimated aspects of the job. You don't realize how big, you get into it, you hear all these stock analysts, you think managing equities is all about, identifying the right companies. And that certainly is a part of it. But marketing yourself and separating yourself from all the other people that are trying to manage money is a real effort. In my opinion, I feel like engagement funds in India, there just isn't a demand for engagement there. There's a demand for sure in Japan because the market isn't going anywhere. India is a much more dynamic, much more exciting. It was really tough to market an engagement fund in India when the market itself is so exciting. So in the end, after 6 years, I left Taiyo. I just needed to take a break after all the travel to India and Japan and things. So now I'm taking a little bit of time off, but that was my career.
All right, thanks, Chris. Frank?
Yeah, so I kind of feel for you guys because you had Chris and Riza pretty much say that they fell into these careers, and I'm the third one who's going to say the same thing. And all of you guys want to study finance, and you're talking to people who did not plan to be in finance, but fell into finance somehow. So I was a bio major who wanted to go and become a physician. So I had before going to med school, I decided to take a job. And this job was literally kind of fell into this job because Goldman Sachs needed someone, someone who knew how to program Access, which I'm like, to be honest with you, I didn't know anything about Access. I'm like, all right, this can't be that hard. And they needed someone who had healthcare knowledge. So and this was, so you needed those two components because my senior analyst, she was I ranked #1 top analyst at that time. And she used to publish this book and which needed a database to create reports and print and get this book published. So I ended up learning quickly learning Access and and showed up to the job. So basically most of the learning I did was on the job. So, and that's how I got to Goldman Sachs. And I realized while I was at Goldman Sachs and that in our entire team, I was the only non-Ivy Leaguer person there. Everyone else was from Harvard, and either they were from Harvard, Yale, or one of the other top schools. And timings were horrendous. Everyone back in those days, I don't know what the timings are. I don't think things are as bad now, but when you come out of college, literally, I was taking car service home 11 o'clock, 10 o'clock every night. But that was a great learning experience because I worked with one of the smartest and one of the hardest analysts to work with. She was known on the street to drive people crazy because she used to work really hard and had really tough work ethics. And I did not have issues with some of the people who were much smarter, who were who had more of a resume similar to Riza. They like someone who was working with me. He came from Harvard Harvard Medical School with an MBA from Wharton. So these were the type of people who were senior analysts who were coming into it, and I came and fell into a role because they needed something special. But I learned a lot during that process. But then something interesting. At that time, Wall Street was really, really hot, and these analysts were like stars because the market was booming. This was like 2000 .com era, and then came Sarbanes-Oxley, where some of these analysts were caught pumping certain names based on the favors that they got. So then there was a wall which was put in between equity research and investment banking. So like I said, the markets are dynamic and things change. So all of a sudden, the the equity research started changing, and the bulge bracket firms started moving towards high paid star analysts to bringing in a bit more younger individuals. So a lot of the analysts started jumping to the buy side, and at that time hedge fund industry was really starting to boom, and new hedge funds were coming out. And these hedge funds were like, everyone had like 60, 100, 200 million dollars, and a lot of that stuff was going on. So one of my colleagues from Goldman Sachs asked me to join a firm where we were going to be doing some independent research on stocks and situations, and provide a thesis to a selected few hedge funds, healthcare focused hedge funds. And I started part of that work. I started building this expert network, which was focused on healthcare space. So essentially recruiting a lot of the top KOL physicians, reimbursement consultants, recruiting them, and then we were interviewing them to find minutia of information which could be valuable for our clients. And our clients would come to us with a thesis that, what do you think? Uh, whether we should invest in this drug, does this drug work? So we would interview 40, 50 physicians just to kind of understand and really kind of drill down, and then come up with our thesis. What is the most probable, most likable, or highly unlikely type of scenarios, and give those report back. It was really interesting. I really enjoyed talking to physicians or other industry experts. And I found out, like, being on the sell side, like, I realized that publishing a report, I was not adding as much value, but giving people, talking to expert, I was able to discover information which was actually valuable, and it was unique. And it was unique. So uh, then a few things happened. I realized that this small setup was not going to work, because one of my partners, she ended up getting another opportunity, and she was thinking about taking that. So I I started thinking, what do I need to do next? But all of a sudden I picked up a new tool of this expert network. So there was a small firm, there were two or three players, and one of the players was at that time Clinical Advisors, and I ended up joining that. So they were a healthcare focused expert network firm, 20 employees, and I went to it as a director of network advisors. So I was going to oversee this entire network, really help them build and recruit and run a team of individuals who are going to do things. Um, but I realized, like, this job is not going to probably uh, compensate me as I want to be compensated. So my CEO at that time saw that I'm pretty good with clients because I had the industry knowledge, so I was able to advise them and talk to them. So he asked me, why don't you look into sales? Come in and let's start doing some business development. So since being a very small company, so you had to wear many different hats. And so I was playing sometimes HR, interviewing people even for tech jobs and this and that. So it was a great learning experience. So the firm changed its name to GuidePoint, and I went into their business development 18 years later. That 20% firm is now valued over $2 billion. We have over 1,500 employees, employees in 17 countries, and we have, uh, many products. Few of them I helped create. Like there was this tracker product where we essentially, what we used to do is, like, we used to survey physicians or hospitals, get their data on monthly basis from same store, and see how the market is moving. So you see which players are losing market share, which players are gaining market share. And these were in the areas where you did not have data. Now that what we started there now has turned into alternative data industry. So later on, we ended up acquiring a firm. Now you get that data that we were surveying. We get that data from 30% of all US hospitals. And we have data analytics guys who actually look at healthcare data and really analyze, and they're able to predict sales of companies, medical devices companies, before it's even comes out in the market. Um, we also now have a division called Insights, where we have hired 80 or so buy-side employees, former guys who've been on buy-side, because buy-side is very stressful. I'm sure Chris and Riza can tell you it's a really really stressful job. So we have now many of my former clients coming and working, and they do teleconferences on these data points. So anytime something is happening, they actually conduct these teleconferences, which are then transcribed and put into a transcript library. So anything that you want to get smart on, you can go into this library and keyword search it. So industry is moving, like I've seen the industry change a lot. So how I got into this career has been very different. Then now I'm a founding partner with the friends like who had marketing advertising agency on which was working on the e-commerce side, and they saw opportunity to acquire some of the smaller brands. And now I'm doing some diligence work with them, and we acquired some brands. But while we were acquiring those brands, the interest rate really went up high, so that entire debt lending and credit lending business changed. Um, so industry is very, very dynamic. You constantly have to reinvent yourself. But unfortunately, or say fortunately, like I enjoy what I do, but it was not the education which got me there. It was just more of being willing to explore and try new things, and being sometimes lucky where you ended up with. So that's how I got to where I am at.
All right, thank you, Frank. Now finally, Eric. Just before you start though, running a bit behind schedule, so we'll say whatever you need to say, but wait. So in order to get through everything, I think we should be a bit briefer with the responses. But thank you, Frank. Yeah.
Yeah, but my advice, Pablo, be talk with us in cutting us if you believe we're standing. So quickly, I will say, I don't know if I work in finance because in venture capital, I never get to see profitable companies. I was invited to a panel at Stanford last year, and somebody told me, so what is the EBITDA that you see at the companies you invest in? And I said, I have no idea what EBITDA is. So first, I don't know if I qualify to be part of the finance world. I can tell you that I do what I do because I'm the son of an entrepreneurial mother that raised both my brother and myself through a very hardship life with a small business. And because of that, I decided at a very early age that I wanted to become someone that could be useful to entrepreneurs. I wanted to be someone that could help people not have to suffer as much as I saw my mother suffer every day. I started investing because I was lucky. There's not other word for that. That at Stanford, I met the founder of what became one of the largest tech companies in Latin America. And because of that, I was able to become an angel investor. And as an angel investor, I started investing in startups, and that gave me the knowledge to later on start a fund. Things that education helped me first is to be analytical. And my education, I would say, it's both engineer, the MBA at Stanford, but also McKinsey and Bain. And they taught me to take decisions based in facts, but also they taught me to use my common sense. And I think that is very important. I think another very important lesson was you have to work hard. Nothing beats working hard. I've met very intelligent people, but they don't put the hours, and that doesn't work. And I've met people that you could say, oh, they are average in their IQ, but they work hard and they achieve amazing results. So work hard. What nobody taught me was, and I will refer to Chris, I think he mentioned this, was how to sell myself. One of the most important things in life is for you to be able to sell yourself, not only if you're in a company and you want resources for your projects, if you want to hire someone, or if you are an entrepreneur and you want to convince an investor, you have to learn how to sell yourself. And at least from my end, I had to learn that the hard way. And I've seen amazing entrepreneurs that didn't have that ability, and unfortunately, they were not able to go very far. On the other hand, I met regular entrepreneurs, but that were amazing at selling themselves. And because of that, they were able to get enough resources to achieve amazing things. So that would be the main thing nobody taught me. And I would love if somebody had given me the theory and the practice to do it.
All right, thank you, Eric. It was really, really insightful and really helpful I feel like for everybody listening. I'll pass it over to Nina for the next questions.
We can move on to decision making and how that impacted your career. I think these questions are more geared towards Eric, Chris, and Reza. But how do you try to look at the market rationally and avoid being swayed too much by your emotions in the midst of huge fluctuations? Maybe we can start with Eric.
So in my case, very quickly, my most important decisions are when to sell. Because what happens in venture capital is you don't get a lot of opportunities to sell your positions because they are private companies. And I'm sure, I guess everybody understands the difference between private and public. And hence, that is when it's difficult to decide, is this the right moment or not? Famously, Don Valentine of Sequoia sold Apple very early, and he was very, very happy because I think he made a 10x. And if he had waited, I don't think that much, it would have been a 100x. No, and I lived through that in a company of us that did an IPO, and we thought, oh, let's wait for the IPO, and it was the worst mistake we could have done. That being said, so what we do is, my mother has a saying that in Spanish is hechos son amores, and basically that translates to love is facts. So we try very hard to look at the numbers and compare them to other exits we have had. And the other thing that has worked very well is to discuss it among all the partners. My experience is that the best decisions are the ones that you can discuss with other people. Jeff Bezos has this phrase that says disagree and commit. And basically, I believe you have to be very disagreeable, basically saying all you think. But in the end, once you make a decision, you have to commit as a group. So something that has worked great for us is discussing among the partners at the fund. And all of us we have to say whatever we think, even if we disagree against each other, but we commit once the decision is taken. So look at the facts, look at the numbers, discuss among many people, and once you make the decision, commit to the decision.
Yeah, teamwork is very important, especially when it comes to big team decisions. We can move to Chris and then Reza.
Yeah, sure. There's a implication, I think, in the question that the more money you have, the more difficult the decision. And I would argue, when you're managing 100 million or 500 million or 2 billion or whatever it is, when it's other people's money, the decision is still it's still the same. Like, I don't feel like just because you're making a $10 million trade, it's more difficult than a $1 million trade. It's like, I feel like the entire process is still, the same amount of stress. Like it didn't go up the more money you were managing, although there are liquidity issues and other things that come up the more money you manage. But I would just highlight, in the equity world, the investors are investing in you and your process, right? They've given you money, whether or not it's 100 million or 50 million or 500 million. They're giving you money because they've done a lot of due diligence on who you are and what you said your process is and what you said you're going to generate alpha from. And so your job is really to put your money behind that. And so having a process, I think, is number one especially for equity managers. You mentioned, Nina, how do you, get through the market fluctuations? Number one, it's really hard no matter what. But number two, if you have a process, you stick with the process. right? If there's a lot of noise that Reza mentioned that you can get in day to day. If you have a process that focuses on fundamentals a year out, 2 years out, 3 years out, and and the market is giving you, lower prices today for whatever reason it is, and you think you have an ability, in our case, to engage with that company to realize that value, then that's where you put your money. And that's what our investors, I think, expect from us. I would also argue, most investors, when they invest in funds like ours, they don't want you to do something different just because the market changes or whatever. Usually they want you to stick to what you do. They expect something from you. And so having confidence in that and, following your process and then, working as hard as you can, I think is what you do. I will also, like Eric said, made the point about disagreeing. We also had a red team approach, which we also did in the military as well. You have a blue team, which comes up with the investment proposal, and they're the ones that are, that are proposing to invest in a company, et cetera. The red team's job is specifically to find holes in that, right? So you don't just have it avoids the sort of groupthink potential when everybody gets in a room and there's usually someone very smart presenting an idea. It's easy to say, yeah, that sounds pretty smart. It's helpful to take a proactive process to disagree with that and just to see if how strong the opposing view can be. I'll just put that out there as well.
That's a good take to have from finding holes in another person's view. Reza?
I'd say one thing that's actually been very helpful career-wise for me is to think hard about how much a company is worth. Because I deal in public companies primarily, so there's a stock price, so you can see what the market says it's worth. But to think hard about what you believe the kind of likely outcomes are. So one thing that we do with all our companies that we're thinking about is to basically build out 3 different cases, 3 different scenarios. What if everything goes really well? And what if things go okay? And what if things go wrong? Like in those scenarios, think about, what the business looks like, what the portfolio looks like, what the company looks like, and what you think it should be worth. And do that kind of thoughtful analysis ahead of time before anything happens. So in healthcare, often, the values of some of these companies are determined by, if the drug is properly developed or not. So there'll be a trial, a phase 3 trial, and it'll read out, and the data will come out, and the product might work or might not work or might work so-so. If you kind of are thoughtful and kind of do your analysis ahead of time, and you have a strong sense of what everything should be before it actually happens, then when you're dealing with kind of crazy volatility in the markets, you have something more tangible that you can hang your hat on. I really think that this will happen, or I think this is what this company is worth. Or even as a long-term investor, there are a lot of the opportunities occur. The opportunity becomes a short-term opportunity. Something's just happened. You may or may not have to react to it. You have to decide if you want to react to something. So being prepared and doing the analysis ahead of time and thinking with a scenario analysis is probably a very helpful way to do things.
Yes, thank you. I'll hand it back over to Pablo.
Just quickly,
okay, so maybe
sorry, just quickly before that, it's been about an hour now, so I'm going to share the results from the poll, and then go ahead and take it away, Pablo.
Okay. So maybe if we could talk a bit about the lessons from entrepreneurship. This is more specific to Eric and to Frank. So basically, like, maybe if you could answer, what mindset shifts have you had in the process of starting and growing one or several companies? And what were the most valuable lessons you learned from failures and from successes? I feel like you guys have already talked a bit about these, but it'd be great to highlight the main points and the main ideas. Maybe Frank could start.
Well, thank you, Pablo. So, I guess let's start with the things that I've learned from being an entrepreneur. Currently, as part of a scale brand, I bought, we bought, we bought a distress beauty company, which makes hair care products. So I'm currently involved in it and trying to help it grow, find find first figure out the business and then kind of plug the hole. So it's an industry I had literally had no knowledge of. So the things that I've learned from my past experiences really, uh, you can go and speak with experts who really understand industry. So that's what my firm does. So I spoke to a lot of people, industry executives, and really started by just speaking with them and be surrounding yourself with individuals who have lived in the industry. They kind of help you really kind of you know figure out a lot of these these problems that you face. So the advice for the thing that I would say is like you know um the networking is crucial and the most important when you come into entrepreneurial roles. And secondly, you're going to wear, you may have prepared yourself for finance or one thing, but you have to wear many hats. Like I remember like when I was at GuidePoint in beginning, I had to interview a CIO for our firm, and le previously coming from Goldman Sachs, like, you had really big HR department and everything got done for you. Here, I had to literally like first figure it out, like how do we hire people? How do we interview them? And how do you interview a CTO? Like, someone that you don't even know what questions they ask, like uh, and what qualifications should be there. So it's a lot of you have to wear multiple hats, surround yourself with the smart people, and uh, and don't give up. And don't give up. Any problem can be problem. Many problems can be solved as long as you stay at it and you keep working at it. And it's just the most rewarding aspect of entrepreneurship is the journey that you go through, journey of growth. Like GuidePoint, like we saw like the growth that we have seen over the times, like past 7-8 years, we were growing north of 20% year over year. So there were times which were really bad times, like where there were indictments in our industry and everyone was jumping ship. So the colleagues who jumped ship, we ended up doing much better than them, like if I look at it. So people who are able to stick through it and really kind of like don't bail at the first time you hit the choppy seas, and you're able to kind of go through it and really kind of ride it out and really work through it. uh, you know found it very rewarding. Hopefully that answers the question.
Oh yeah, great. Thank you, Frank. Eric, what do you have to say on this for this question?
So 3 points. First, when I worked in McKinsey, I was fortunate that at the time the global head of McKinsey visited the office, and I had the opportunity of being one of the analysts invited to meet him. And I remember I asked him what were the most important characteristics that his most successful clients had, and his most successful clients were CEOs of very large companies. And I remember he mentioned that the most important characteristics is that successful CEOs were those that had a very clear long-term vision, 10 years or more, and were obsessed with a very short-term metrics. And curiously, that have become very useful for me at deciding in who to invest and who not to invest. And the reason is, one of the most important things an entrepreneur has to have is a clear and ambitious vision. I have never invested in someone that has become successful that from the beginning didn't have in mind to become extremely successful. Like you will listen to them and you will think this guy is crazy of how can she believes she's going to be something so big when right now she has nothing. But that is a characteristic that all of the people I have invested that have done successful had it from the beginning. And why is the vision so important? And let me go to the second part. And what I was mentioning, you need to be good at selling yourselves. All the entrepreneurs in which I have invested that have done amazing were very good storytellers, very good at selling their story. And part of having a compelling story is having an amazing vision. So you have to learn how to transmit that vision, to tell that story. So as an entrepreneur, and I believe as any job in life, the better you can sell yourself, the better you're gonna be. And last, talent. If you want to be successful in life as an entrepreneur or whatever, you need to surround yourself with people that is more talented than yourself. And the only way you can do that as an entrepreneur when you have zero money to hire amazing people is to be able to sell yourself and to sell your vision. So in conclusion, 3 things that I believe every entrepreneur should have: a compelling vision, a compelling story that can help them sell themselves, and an amazing team that they can bring because of how they are at selling their story.
Thank you, Eric. I'll pass it on to Nina for the next question, or to Paul. Sorry.
Yeah, thank you very much. So I think we'd just like to touch a little bit more on Chris, your experience. Obviously, you have a really diverse background, being in the military, doing East Asian studies, learning Japanese. So I guess you've kind of touched on some of the questions that we were going to ask. So I'll just ask, how did your time in the military develop you in ways that served you in your finance career?
Yeah, there was a number of things. I would say number one, if you go into the military, and if anyone is considering it, I would highly recommend it, by the way, for the experience. I think it's often underestimated the type of the quality of experience that you get there. But right off the bat, as an officer, you get like maybe 6 months to 9 months training. And right off the bat, you're in charge of a team of anywhere between 5 to 20 people. And you are completely unqualified to lead those people. Like a lot of time they've literally been doing that job for 20 years. They're 45 years old. You're 23. You have a college degree and you're an officer and, bright-eyed and bushy-tailed. And this guy has literally fought in the previous 3 wars that the U.S. was in. And you're in charge of those type of people. And and so what you realize is that leadership is not about being the best at everything, right? It's about sort of bringing out all the talents of the team and organizing everyone and sort of setting, as Eric said, the direction of where everybody's going. But the military gives you that experience, and it's a very humbling experience as well. Like you don't go in there, like you might think you go in there as an officer and you're like all of a sudden, you're in charge of these people that you're better than. It's not. In many ways, you are the most inexperienced. You are the guy that needs to learn from everyone else in the room. And so I think having that type of experience where they teach you leadership from that very, the very beginning is really helpful when later on in your career you get put in those type of roles. And so I can't emphasize enough, just in general, the value of that type of experience to anyone that's looking to, further a business career, or frankly have wonderful experiences and learn how to be a part of a team. The other thing that, I was in intelligence specifically. And so, you're in charge of telling, the war fighter, whether or not they're SEALs or pilots or whoever else is going into danger, what you think they're going to see when they get there. And in a lot of cases, and this happened a lot, especially when we were first going into Afghanistan, you don't know what they're going to see when they get there. But you have to give them as clear of a picture as you possibly can. And so communicating, I think, probabilities and what you know and what you don't know to people that make decisions is something that I don't think you learn about in college or almost anything else. I would argue a lot of you, as you go through your high school and college careers, are learning how to seem that you know everything. And in reality, when you get out there, you have to communicate what you do know, and you can't fake it if you don't know it. And I think the military does, especially as an intelligence officer, it did it. I mean, when you're communicating with someone that's going to go into a house, at night or something, and you can't BS those guys that you know something you don't. And so I think Colonel Powell was the one that said, "Tell me what you know, what you don't know, and what you think is likely." He had a very famous quote about that. And practicing that, I think, within that stressful environment in the military was really important. On the one hand, you did have to know what you could know. If you didn't know the range of some of the manpads, the rockets that were out there, then you didn't do your job. But you had to also communicate what you didn't know, which was often quite a bit. So I think number one, and you find that out in portfolio management as well. What do you know about this company, and what do you think is going to happen about the company? And if you'll see a lot of false confidence, I think, in this industry, a ton of it. And in some ways, it sells tweets, it sells TV time, but I think it's a hindrance if you really want to succeed for the long term in investing.
Yeah. Oh, that's a couple of very interesting things. So, with regards to leadership, it's not necessarily about being the best, but bringing out the best in others. And then with intelligence, it's you have to communicate what you don't know as well as just as clearly as what you do know. That's yeah. Now, do you think that being in the military maybe developed a sort of stoicism, like a bit of resilience to the sway of emotions that maybe helps you handle the stress of seeing fluctuations?
I think yes. I mean, in some cases, you can always say that what you do in the military is like the most stressful thing that you'll ever do. I think, and most people will say that. But so I do think you learn to manage your emotions under stress. You get used to being yelled at. So you just get used to stressful situations to some degree. But I still think the markets are a uniquely difficult environment where I don't think, the ideal is that you're stoic and you can ignore everything. But the reality is the market is always telling you something. And so having, you could say, oh, I have 100% discipline and I never listen to the market. Well, you're probably going to miss something if you do that. And so there's this weird balance that you have to manage. So I don't think I'm answering your question directly, but number one, yes, I do think it helps. But number two, I don't think I'm any better at investing because I was in the military. I'll put it that way. There are wonderful investors that never had to go through the military experience.
Yeah, thank you. Very well said and very, very well articulated. At this point, I'm just going to pass it back to Nina to ask some questions of Eric and Reza about networking and management.
Thanks, Paul. Yeah, like he said, we can move on to network and management. How crucial is networking in your fields, and what tips do you have for effective networking, especially for those starting without any connections? So, Eric and Reza.
Yeah, I'll start. I think that networking, I think, is definitely important in many ways. One, and just in general enjoyment of your day-to-day life and work. It's good to have colleagues and people that you can talk to and people that you know and you can rely on. I think it's in some ways it's kind of tricky as a public markets investor because you don't really don't want to talk too much about what you're doing, especially what's kind of on the come, and you don't really want to kind of divulge anything that you're not supposed to. But on the other hand, it is very important to build a network of people. There's different levels of networking. You have your network of people that you can really trust and rely on. Then you have your network of colleagues and kind of acquaintances in the business world, which is sometimes very helpful, especially if you look at things broadly, and you come across people in different things. Just like tonight, like I hadn't seen Frank in a long time, but you'll come across people at different times in your career, and it is very important to kind of maintain kind of good relationships. And I think some of the easiest things, sometimes people say it's hard to network. I think just as you're starting out, just being being social and being friendly with people, and just asking people who are people you'd like to work with in the future, or you might admire, just asking them simple things like, how did they get to where they are, and what made them successful, and to do that. And just, if you can cultivate relationships over time, that's very important, especially if you can find a mentor. I mean, I think mentorship is something that's it's not well taught, and most people don't really kind of have a mentor career-wise. But if you can find someone that you trust, they may not even be in your industry, but sometimes having someone who's a mentor to help you along as you develop your career, I think is quite helpful if you can find the right person.
I would say networks are extremely useful and powerful. I think it's obvious for all of us. My advice, and I will be echoing Reza, I have found that people can be extremely generous with their time. So reach out, dare to reach for people and see if they would be willing to give you part of their time. And many times you're going to be surprised that they will say yes. My advice in that regard is come prepared to the meeting. I think all of us in this panel have had those type of occasions in which somebody reached to you and they ask for your time and you give it. And sometimes it's fantastic because the person really makes use of the time as best as possible. And sometimes you end up saying, oh my God, I really don't want to see this person ever again. So plan for a meeting and you will be successful. But that will be my only advice. You will be surprised how generous people can be with their time. And if you reach out, more often than not, you will be surprised that people will be willing to speak with you.
That's great advice. Thank you. Our next question is, what challenges did you face when you first became responsible for managing a team, and how did you overcome those challenges?
So let me start very quickly. I'm thankful that both McKinsey and Bain were very good schools of how to manage teams. I think one of the first things is to know yourself, because if you do not know yourself, you do not know first what type of team members you want to have, and second, how to manage them. Once there is this test called Myers-Briggs that I understand can be very disputed, but basically it's a test that tells you what type of personality you have. And once online, I found Myers-Briggs for every Marvel character. And one of the toughest discussion in my firm is who is the best Marvel hero. And my partner unbelievably believes that it's boring Captain America. And I believe it's obviously Iron Man. That being said, when I was looking at this Marvel characterization by Myers-Briggs type, I have done my Myers-Briggs test. And if you have not done it, I recommend you do it, because that is a good way of knowing yourself. You can find many online tests. But what was funny was to discover that Captain America, according to this characterization, was the complete opposite of Iron Man. And literally that's when I realized why our partnership works so well. because we complement each other fantastically. For every stupid idea I have, my partner has a solid way of showing me I'm being stupid. On the other way, sometimes my stupid ideas work. So know yourself, that's one thing. Second, know yourself and then surround yourself with people that complement you and can give you different points of view. And second, also, when you manage people, something that you learn in consulting is you have to understand that person in particular, how much they know, how much they confident they are in themselves, because that defines how you manage people. So I think it's called, I can't believe I forgot that. But it's not the same to manage someone with a lot of experience that you have to leave alone and let them go on their own, than manage someone that it's new. In that case, you have to be on top of them. And last, because I am diverging, learn how to interview. So some of the most important things I have taught entrepreneurs is how to interview people correctly. Sometimes, for example, in my case that came from consulting, I thought that all interviews need to be cases. Asking a candidate to make a case when you want him or her to be a good salesperson is the most stupid thing you can do. So learn how to interview, because that will help you decide if you are hiring or not the right person.
I guess to that I could add, like, kind of one thing that's important is just to try to figure out how to effectively communicate among team members. And some people communicate, in certain methods. Some people are oral communicators who like to do things in writing. Some people are often texting, every few minutes. So just to develop a stream of kind of effective communication that everyone can agree to. And I guess the other thing is, as a general principle, just try to figure out in a team how much responsibility to give people and how to have people be excited about getting more and more responsibility, and giving them enough, if they can handle it, enough rope to keep doing more and more, and kind of developing themselves and contributing in increasing manner. And it's sometimes hard when you're starting out to know what people can actually do effectively, but to allow them, to give them rope so you can figure out what they can do and how they can challenge themselves and have a great work environment, but at the same time kind of contribute to the ultimate goal.
Great, thank you. I'll hand it back over to Pablo.
Thank you, Nina. Now maybe we could talk a bit about some advice that you guys have for people that aspire to be in the finance industry. So what steps should people take to best prepare themselves for a career in finance? And are there any resources you would recommend for someone to look at if they want to learn more about your field, about finance, and maybe educate themselves a bit more about it before diving in? We could start with Chris, maybe.
Yeah, sure. I guess the first advice I would have, I think like a lot of the other panelists, I get a lot of resumes from people looking to come into the finance field. I think the first advice I would have is to do well with whatever's in front of you, whatever that job that you're doing now. There's a finance aspect to it. I know that sounds dumb, but if you're working in a company and, it's not finance, let's say it's, it could be consulting, it could be manufacturing, it could be anything. There are a ton of things you can learn about that industry or company or the job that you're in that I would love to hear about to help understand how you analyze companies, right? So if you're working in a factory that manufactures widgets and you want to get into finance, I would understand, front to back the economics of that industry, right? So that if you're talking to someone, you can at least, you have one company that you can discuss. Read books about finance. Obviously, I think, everyone would say read the Warren Buffett essays and 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 uh, and anything by Ben Graham. Just to have sort of the basic equity analysis. But I'll just repeat, like there is a finance aspect of almost every position in every company. If you take the larger view of what am I doing in this company, how am I adding value to that company, and the more you study that and the more you understand it, the better you'll be prepared, and the more interesting perspectives you'll bring when you actually do enter the finance world. And I think Reza, he spent years developing that expertise in the medical field, and if he didn't have it, he wouldn't be in the role that he is right now. And so I think, and a lot of times you're looking for someone with interesting expertise, with different perspectives to bring into these roles. And if you're constantly trying to do the cookie cutter finance career, I think it's very difficult to separate yourself from a lot of applicants. And then the other thing I would mention, it's along the lines with what Eric said, is become a good communicator. There are a ton of people trying to do stock analyses and reading, building models. When it comes down to it, being able to communicate clearly what your thesis is, the uncertainties around the thesis, why you believe a position should or should not be taken, that is an exceptional skill to develop. And I can't tell you how many people fail that jump. Like they'll have a decent thesis, they'll have a model, they'll have all the numbers, and they just can't communicate what they're trying to say. And so I would really highlight, practice communicating, practice writing investment theses, and things like Toastmasters and communication, development classes and things like that are really valuable, I think, in the long run, no matter what career you end up in.
All right, thank you, Chris. I think it was really interesting what you said about the finance industry being so broad and everybody in any field kind of having a way to fit in, no? Because it's such a broad field and finance goes into everything. So yeah, I think that was really interesting. Frank, could you follow up?
Sure. So this advice can be actually for anyone, whether you're finance or non-finance. My son is a senior in high school, so I was giving him this advice. He's about to go into computer science. So what I did was I spoke to one of my friends. His son just recently joined Google AI team. So I told him to speak with him, and I had my son speak with him. So what he told him was, listen, it's not as important to which school you're coming from. What is the most important thing is the internships, the experience, and the story that you bring to the table. So someone who's lacking the network and doesn't have some of those things, some of the connections within the industry is by doing things more than what others are doing. So you're always competing with the market. I'm currently interviewing some young kids who are coming out of college. So pretty much everyone's resumes look exactly the same, but there are always few kids who have done something additional which kind of makes them stand out. Because initially you have to get yourself in the door in front of someone who's going to interview. So having something interesting job or internship is the first place where you're going to separate yourself from others, and being able to then you have to prepare yourself to tell a good story, and being able to tell a good story, selling yourself. So it always comes down to sales. Sales, selling yourself doesn't matter any job that you do. Reza was talking about it, Chris was talking about it, and even Eric, they sell something. Or entrepreneurs, it's always going to come down to selling it. So you first have to learn to sell yourself. What is your story? What makes you unique? Why are you better than anyone else? If you don't have any of those, get some experiences under your belt which makes you sound really sellable. You don't want to be boring as like, yes, and then I went to this school, then this school, and I'm coming out of it. You want to tell the story. Listen, what I learned, I did this internship overseas based on this. I learned this finance. I helped them raise this capital, or I launched this company. So you want to have good stories. So come come with the, do a diverse experience. And secondly, build network, reach out to people, more people you speak with, you'll find people are very giving, as Chris, I think it was Chris who mentioned that, or Eric, that reach out to people maybe. And I told this to one of my cousins when she was like going to a state school, and I told her she was doing accounting. Actually, she was going to community college. She was doing accounting. I'm like, you know what? This is a perfect place to be. Do really, really well at community college. Then you can go to next place, get internships throughout that. After that, she got her job once she graduated from school. She did really well in college. When she graduated college from a state school, she landed her job at PwC. And you know what? Doesn't matter like how good of a great school you went to, and if you were in accounting, that still, like, if you were on PwC's audit team, that's where you could get to. So you can get to those places by grinding harder, doing things a little differently, and really reaching out to different people, asking for advice, and being prepared, and really putting effort into it.
All right, thank you, Frank. Eric, could you talk a bit about this? Yeah.
Thank you. So I think I mentioned earlier that working hard is very important. I think it was in a book called Barking Up to the Wrong Tree that talks about what successful people do. And I remember one of the things it mentions that success, it really doesn't matter what school you went to or what company you work at, but successful people were those that in whatever institution they were the best. So it compared people that went to Harvard but was in the medium scores versus people that went to public schools but were on the top. The probability of you being successful was higher if you were the top student at a public university. So that will be my first advice. Wherever you are, give it all, because you never know what that specific opportunity, what that specific moment is going to be 10 years later. That's how it has been for me. And I'm always surprised about how things that happened many years ago, because I did the best I could at the moment, years after they helped. So that would be my first advice. Regarding, I think we all agree in that you need to learn how to communicate and sell yourself. A book that I would recommend is Talk Like Ted. It's written by the guy that prepares, or at least used to prepare the people that will give speaks at TED, this talk event. And it's very good at telling you how to be better at telling a story. So definitely would recommend that book. And also, I think Chris already mentioned it, Warren Buffett, it's amazing. I think his letters are so good at describing the most sophisticated things in the more simple way. And I will add also the letters written by Jeff Bezos. I believe Jeff Bezos has created one of the best management culture. And in his letters, you can learn a lot about how he takes decisions, how he structures teams. So those, I think there's a book that summarizes something like Walk and Wonder, something like that. But the letters by Jeff Bezos are also amazing. Those will be my advices.
Okay, finally, Reza.
I would say, there's some really good points I think everyone made. I think someone said this before, but I think you have to really you have to dream big, and you have to think really big, because you're early in your career. Don't kind of limit yourself to just what's ahead of you. You have to think kind of big thoughts and where you could be, way down the line. And something that I think is very effective, which I personally have done at some points, but haven't always been great at, is trying to think of a plan. Like, what do you want to be? Like, where do you want to be in 5 years? Where do you want to be in 10 years? Just kind of think long term. So those would be two important things. But of course, as Eric said, you have to work hard to and do kind of, you have to have your kind of, ear to the ground and work hard from what you're doing right now. But at the same time, you have to be thinking kind of what you want, what your ultimate goals are. And also, I think people in general in that you meet love to talk to young people, especially if people who have like a vision for the future, a vision for themselves. I think, that's one thing, as Frank pointed out, you have to kind of stand out. And that's a good way to stand out if you can explain what you want to be down the road and what you're thinking about, but not in small terms. I mean, you shouldn't limit yourself. You could have a lot of opportunities, but you don't have those opportunities if you don't think big. You don't say I can't do it. And don't ever say that you can't do it, because there are many people I've met who are amazing, and they doing something completely different than they were ever trained to do. But they felt that they could do it, and they aspired to do it, and they worked hard, and they did it. So it's always it's always out there for you. You have to think, dream big, but work hard.
Okay, thank you, Reza. I'll pass it on to Sahib. Yeah.
So thank you, speakers, for all those amazing answers. It is truly a special experience to get to hear directly from you experienced members of the financial world. Now, before we move on to the Q&A session, we would like to take this opportunity to once again thank our partners for their support in creating this webinar for you folks out there. So once again, a big shout out to the World Literacy Foundation's Young Ambassador Program, United World Colleges, Techno US, Blue Dragon Children's Foundation, the Young Investor Society, Mission Asset Fund, Smile Foundation India, and lastly, Illuminate Business.
We can move on to our Q&A section now with questions from the audience. Our first question is specifically about Chris and his experience in investing in India, and how that biggest investment was a fraud. Can you tell us a little bit more about that?
Yeah, sure. That probably is my most interesting experience. So essentially, to all of our points about telling a good story, I think Eric, has probably seen a lot of good stories in his time that don't work out as well. But in India is a growth market. You invest there for amazing growth companies. The opportunity is immense. So when I joined TGIF, our largest position was in a company called Vakrangi, which you can Google, and you won't find that the promoter was arrested or anything. It actually still is listed, which is unbelievable. But if you look at the stock chart, you'll kind of see visually what we went through. But in any case, what they did was they had little outlets all around India. And they claimed they had, I think at the time, about 50,000 outlets all around India, where people could go to buy stuff from Amazon. People that didn't have an address, they could go to these little outlets, buy something from Amazon, have it delivered to that outlet, and then there would be the last mile delivery that Vakrangi would do. You could do little banking services, and there were basically just small transactions that this outlet allowed all throughout India. And the story is very compelling for foreigners coming into India. But even our Indian portfolio manager at the time bought into this idea. So it wasn't like it was only foreigners that bought in, but it was very compelling. This is the type of growth that you invest in India. You're investing in the next 7-Eleven for, the next 20 years. They're going to keep on growing outlets. And I visited many of these outlets all around Mumbai, traveled 3 hours outside outside Mumbai and all these rural areas, and you could see the outlet. And every time I went there were these people in the outlet doing these transactions, and it almost looked like it was the hub of each little village I went to. It turned out, well, I'll jump. I won't jump to the conclusion yet. I visited some of the outlets in Mumbai multiple times. And I was with one of our investors. He was a Japanese gentleman, and we were visiting an outlet. And I recognized the customers in the outlet, right? And when you would visit these outlets, the IR would join you from the company. And so I was at this outlet multiple times. And about the third or fourth time, I recognized the guys that were in there. They were the same customers that I had seen several times before. And so I started to think about it. And then the company invested in a jewelry company, which was odd. And I would add that this entire time, the cash flow was beautiful. The EBITDA, Eric, the EBITDA was wonderful. The EBITDA growth was great. Revenues were growing, 75%. They were opening up, 1,000 new outlets every year. And I'll reiterate, the cash flow numbers were there. And so, and they invested in this jewelry company, and the stock just went limit down the next day. This was January 17th, 2017. Not that I remember it. It went limit down that day when they invested in this jewelry company. And we're thinking, why is that so bad? And next day, limit down again. Next day, limit day down again. And so we're like, what is going on? And so we go back to these outlets. Some of them, I was having these like suspicions about whether or not the customers were real. And I looked at the Amazon packages that they have sort of piled up in there, ready to deliver to the customers, and the dates were scratched out. Like the dates of delivery were scratched out. And so it increasingly looked like these things were staged. And I talked to a friend of mine in the Mumbai markets who said that he was being brought to a outlet in rural India, and I'm probably running over time, by the way. This can go very long. But in any case, he was visiting an outlet, called up the IR, said, "Hey, I'm going to this outlet. Where is it?" And on his way there, he sees a truckload of people speeding by him on the highway. When he gets to the outlet, all those people in the truck are at the outlet doing whatever, pretending to do whatever, right? And so the bottom line was this whole thing was a fraud. The cash that was in the cash flow statement, they were taking from people that were opening the outlets, the franchisees that were giving them money to open up stores, and they weren't actually doing anything with those franchisees, which actually was a tragedy in itself. This thing was limit down for probably about 3 straight months, every day, limit down. And it is an unbelievable experience to, we had just accepted our first investors, and then we lost probably half their money in the first 3 months, which took a long time to make up. And the stock is still traded. The promoter has not been arrested. And yeah, that's my India story. So the due diligence aspect, I mean, for me, it was just like, okay, don't trust anybody. You got to do diligence on way more due diligence than you even think required on some of these things. The depth of the fraud on that thing was just unbelievable.
Yeah, wow.
I could write a book about it, and maybe I will eventually. But
You should.
sorry, I
Turn
went
it
on a
into
little bit
movie.
long.
Yeah.
What's that?
Turn it into a movie. That's a great, yeah. I definitely watched that.
But yeah, I mean, it makes for a great story.
Yeah, could you just
Probably-
spell the name of that company so people can look it up and see like the stock price?
Sure, Vakrangi, VAKRANGEE, Vakrangi Limited.
Okay, thank you. Go ahead, Nina.
Thank you. But yeah, really unfortunate experience, but makes for a great story.
Yeah, like Eric said, you learn from your failures.
Yeah. Our next question is from Aaron Sada. How do you manage risk investing into the biotech industry with synonymous with volatility? This is directed to Reza.
Yeah, that's a good question. I would say most importantly, you only invest in things that you really believe in, that you have done your homework, and you kind of understand well. Biotech by its nature has successes and failures. If you think about the average drug goes through phase 1, phase 2, phase 3, and the success rate from drugs that start in phase 1 to making it to market is maybe, depends what area it is, but maybe 10%. So 90% of the things are going to fail. you certainly don't want to be invested in a company where the lead product is going to fail. That's probably not a good investment style. So doing your homework, I think in doing your homework, trying to understand if there are any natural models of the disease that you're studying, or if there's any, were there any previous drugs that were attempted, previous molecules that were attempted in this. The other main thing I think in terms of biotech investing is to understand what your risk tolerance is. I was telling before how you should we do scenario analysis, seeing what a bear case is, a base case, and a bull case, and try to really understand how likely it is that each of these things will occur. I just mentioned that if you're starting a drug in the clinic, you have less than a 10% chance of it making it to market. So your cases have to be very realistic, and knowing those probabilities can be quite hard, and trying to understand what the likelihood of success and failure is very hard. If you think about, like, if you're going out and buying a lottery ticket, you could buy a lottery ticket today and you can win, I don't know, Powerball or something, win $500 million tomorrow with a $1 ticket. Is that a good investment? A finance person says it's a terrible investment, because your expected value is, for that dollar investment, is like 50 cents. You're going to lose half your money. So kind of doing that. And then in terms of understanding your risk tolerance, you have to have things invested. The size of your investments should, never be bigger than the amount of loss you can tolerate if things go bad. So kind of sizing them and, putting more chips, so to speak, more investments on things that you have the highest conviction in, that you've done homework in, is important. So I think those are the key things.
Thank you. This next question is from Akil. As AI is becoming more prominent, I want to find something that I can still be safe with without having the fear of AI taking my job. For now, I want to look at the intersectionality between business management and financial applications with engineering studies, so I can not only know the numbers where I can use AI as a catalyst, but also have the knowledge of the engineering side of things. So as we advance, what would you say to someone who wants to use their expertise to get into those high levels of management or entrepreneurship?
Eric, I think this might be a question more suited to you, since it's got some interesting touching on tech.
Okay, I'm gladly, but I'm pretty sure that anybody else on the panel knows even more than myself. To be honest, I don't know. I would not plan my career on where AI will go. I think it's very difficult to predict. I see it every day in all the companies that I invest now. AI is part of some of it, and I've been surprised of it becoming part of things that I never thought, and collections, programming, and yes, it's moving forward, and you see it. So my advice is, don't try to decide your career based on what you know right now, because then you will be making a mistake. I would try to go to a place where there will be smart people. Talking about networking, your network to a certain extent is the people you study with. So try to decide if you're going to be part of a place where there's smart people. And it could be the Navy, it can be, I'm pretty sure there are several places. And second, try to decide to go to a place where they teach you, and I'm sorry to be repetitive, but to be a hard worker, because that is what is going to, and to learn continuously. But sorry, I know it's a terrible answer. I have no idea where AI is going to be 10 years from now. For example, my kids ask me that. My kids are getting into college, and I told them, go decide to do a career in a place that it's demanding. Go to the best university you can go, but also to choose a career that it's demanding, and that you're going to be surrounded by talented people, that it's going to be your most valuable network moving forward. Sorry about the bad response, but it's what it is from my side. I would love if somebody from the panel, else from the panel that I'm sure has a better answer that takes this one also. I would like to hear their answer also.
Eric, I would say your answer is pretty much right. No one really knows where AI is going to go. And every day it's just surprising and amazing, the areas it's getting into. I thought sales or business development would be the last place to go, but a lot of the very lower stages of stuff where you used to really hire like kids out of college, those jobs are starting to be taken by AI. So this is going to happen more and more as these chatbots and other things get better trained. But I think your advice was accurate, that don't choose your career based on where the technology is going to go, because it's hard to predict. But whatever you end up doing, just be very good at it and have a passion in it. And I've seen people who are passionate, they end up making their way. Doesn't matter what industry they're in.
Thank you very much. That's yeah, I think that these days, especially with AI, it's really tempting to like try to make a decision based on where you think the technology is headed. But as you say, it's so unpredictable that I think it's very wise to just consider your own preferences and skills a bit more. So with that, I'm going to hand it over to Pablo, who will just ask some concluding questions for all the speakers.
So thank you, attendees, for those wonderful questions, and thank you, panelists, for those really good answers. I'm afraid we're coming to an end on today's webinar. So in conclusion, I just like to ask the speakers for some closing statements, and basically just say anything you want to reiterate or anything you want to really stick with the audience. And yeah. I'm gonna say, Eric, you can start.
So very quickly, once again, think what you want to do in the very long term, and that will help you guide your very short-term decisions. And on the other hand, become the best communicator you can be, because that is going to help you always in any type of situation you are. I actually, every year, I do an assessment of my 10-year plan. And in that assessment, I include both professional and personal goals. To give you an idea, I just climbed Mount Kilimanjaro with my youngest daughter. And it's because I had it on my 10-year plan, and I keep dragging it until one day, reviewing my plan, I said, I have to do this. So do that. Have a long-term plan and write it down and review it yearly. And in my case, that has been extremely helpful.
All right, great. Really interesting. I think that's really helpful, and yeah, I'll definitely try to do what follow your advice. Reza, could you follow up?
I would say one thing that's important is just to maintain your curiosity. So just always think of yourself as a lifelong learner, because we're talking about AI. Frank was talking about AI. But the world's changing all the time, and you always have to adapt to new things. But in your work life, you should always strive to learn as much as you can, and not even just in your work life, in your whole life, but always being curious, always reading, or wherever you get your information. I know people don't read books anymore, but wherever you get your information, always be curious and always try to dig in and try to be as knowledgeable as possible. It'll always be helpful.
All right, great. Frank?
I would probably don't get into comfort zone. Everyone has comfort zones. If you think you're getting into comfort zone, you're starting to get really good at something, it's time that you have to add some additional challenge to your life. So always, get yourself out of your comfort zone, try something different, challenge yourself to do something, and also, constantly assessing yourself and benchmarking yourself against your peers and doing things to be better than what rest of your peers are doing, because especially you're starting to get into a career, you're going to be benchmarked, and uh, you're going to have to be better than everyone else. So just kind of knowing like what everyone else is doing and what you need to do and how you can differentiate yourself, it's going to come really handy.
All right, thank you. Finally, Chris.
Yeah, I would just highlight it. I don't think it's actually an anomaly that a lot of us on this panel have, non-traditional finance resumes. I think actually those resumes are the most interesting. I think so. When you're young, you're constantly thinking of, okay, I need to get into a good school. I got to go get into that good first internship. I got to go work for that top, tier consulting company. And I would just encourage the flexibility to take advantage of interesting experiences that are going to round you out as a person, that are going to give you perspectives that all those people doing the exact cookie cutter resume sort of would not have, right? Whether or not it's traveling, whether or not it's taking advantage of an opportunity to go to another country, or taking a leadership position or any kind of job that you might learn a ton at. And just to echo what Eric and I think Frank said well is, be that node of competence, be that guy that's works harder and gets things done better than the people around you in whatever you're doing. I think that's the key. But like I said, don't be afraid for non-traditional career choices. I think actually in the end those things work out the best.
Well, thank you very much, everybody. We're just about coming to a close, so just once again, I want to thank our speakers. I know you're all very busy, and so I really appreciate you sharing 2 hours in your Friday evening to speak with us and our audience today. Of course, thank you, audience, as well, for tuning in. Your dedication to learning more about finance and how to succeed in a career is really admirable. Very as they've mentioned, hard work. I think it's a great thing that you all are tuning in and you have that commitment. And it would be a shame if you weren't able to connect with these speakers much after this conference. So Mr. Loving and Mr. Khan have shared their LinkedIn and email and LinkedIn respectively. So I'll be sending that in the chat. There you go. And yes, I'd just like to thank all our guest speakers again from yesterday and from today. It's been an honor to hear your stories and insights. So even though they can't hear you at home, we hope we can, everybody can just give them a big round of applause. So once again, that's Jimmy Bisharat and Cameron Galbraith from yesterday, Chris Loving, Eric Perez-Groves, Reza Keshavars, and Frank Khan today. To everybody who joined this webinar, your certificate of participation and the PDF summary will be coming your way in just over the next couple days. So if you don't receive them by then, just feel free to reach out to me or to email us at info@myflyglobal.org. We will be sure to get those to you. So thank you very much, everybody, for joining Finance Unlocked 2024. It's been a pleasure to host our guest speakers and to our audience. Thank you very much, everybody, for tuning in.
Thank you.
Thanks, guys.
Thank you.
All right.
Thanks, guys.